Well, for more on the escalating trade tensions, I'm joined by Saruhan Hatipoglu. He's the CEO of Beri and CGTN's global economics analyst. Welcome back to the show.
Good evening.
So, a lot to unpack here. We saw that China responded within hours to planned tariffs on 106 US goods, including soybeans, planes, autos, and pork. And that's only if the US goes through with its list of about 1,300 goods that it wants to put tariffs on. A much shorter list from China. Same economic impact of about $50 billion. What are your thoughts on all this?
Correct. I wasn't surprised. I was expecting it fairly quickly, maybe not the next day, and definitely the same amount, the 50 billion. But what was interesting is when you look at the list that the U.S. is imposing tariffs on, Rachelle, you're seeing that it's in the high-end product or industries, kind of targeting the China 2025 move that's taking place. Where biomedicine, aerospace, energy, new energy vehicles, all of these things are targeted, so it's for the future. Chinese response was more immediate. They're going after agriculture, soybeans. We've been talking about it for a couple of weeks now. They immediately said, look, we're going to hit you with this, and that is not good for this president as well as the party, because the midterm elections are coming, and these are the industries that are supporters of Republicans.
So given the speed and the scope that we're seeing in this tit-for-tat of these proposed tariffs right now, does that increase the likelihood that dialogue is going to be more likely?
Absolutely. Actually, when the Chinese came up with the response, that was a sign saying, let's sit down and talk. We did what we need to do. Look, we've done the 50 billion you did. We didn't do anything more than this, even though immediate impact on certain industries was there. That wasn't expected by the US. So these are not implementations, these are proposals. Until May 22nd, there are companies that could go and say, we want to be exempt from this. After that, there's 180 days for the US government to decide on this. So we have a lot of time. And I think we're going to see intensifying, and Chinese ambassador to the US mentioned that too in this phrase, intensifying negotiations. And none of these countries wants a trade war. And I think cooler heads eventually, I don't know after how much damage, but eventually will prevail.
Now, it is hard when you have so many different voices, when you have Trump and you have some people in his administration kind of taking a different tone. In fact, Wednesday morning, Trump tweeted about the trade deficit with China, saying, when you're already $500 billion down, you can't lose. Now, we already know his calculations are off, according to US and Chinese official data, but who does have the most to lose in all this?
Both countries will lose. Let's put the cards on the table here. The United States will lose because consumers will lose. Agriculture industry will lose. Manufacturing industry will lose. Look, this was tried before. Let's look at the steel tariffs. In 2002, George Bush imposed them. It stayed for a year. During that time period, imports of steel increased by about 15%, domestic production by 10%, and 200 jobs were lost. Nobody wins in a tariff war. China has a little different problems here. Maybe not as much from the trade side, because more than close to half of the workforce now is in the service industry. The trade part of it has less of an impact on the economic growth, but foreign firms in China will be affected by that. They're in China so that they can have access to other markets. If that's kind of closing down, not no investment, but declining levels of investment will be coming to China, so that's not a good thing.
Now, as we keep mentioning, it is important to remember that these are still proposals at this time. We still have that waiting period for 60 days, at least from the US side. But for investors, for companies who are viewing this, not wondering what to do as they're trying to plan amid all this uncertainty, what is the reaction there?
Well, we don't have companies in the stock market, the short-term investors really. They're looking more to foreign direct investment. And as their incentive is more long-term, so they're in a wait-and-see period as these negotiations continue. But the short-term investors, they are really worried because there's other things going on with China having 1.2 trillion US bonds. 3 weeks ago, there was a rumor by Bloomberg saying that China actually would stop buying the bonds. And let's remember what happened in the market. And that was a rumor, only a rumor. They could actually even switch the maturity of these treasury bonds. They could come up with another rumor that could really, really hurt the US stock market. So short-term investors are in a much more difficult position, if you will, than the long-term investors who are looking in foreign direct investment or FDI.
And help people understand in terms of the role of US treasuries and how that could perhaps be leveraged given the impact that they have on US companies and their growth.
Well, that's the problem, because the companies are telling the United States government, don't do this because we are exposed to this. But again, as part of the negotiations, I think what will happen, there's a very important speech coming up next week, Boea Forum. President Xi is going to speak there with to political leaders and businesses. We may see a little more opening from China. The proposal that they made about opening the securities market, there may actually be a date next to it. We may hear about buying more semiconductors from the United States at the expense of Japan and South Korea. So these openings will take place, and I think the companies eventually will be okay by that. But unfortunately, this waiting period is the worst, especially for short-term investors.
Now, as we do try and look at the dialogue approach, we know that the US has criticized the World Trade Organization and is really essentially circumventing its dispute mechanisms. China is still saying it wants to go through the WTO. It's having its requests for consultations being rejected by the US. How does China progress in all this? It says it's fulfilling its WTO fulfillments. What do you think about that?
Well, WTO issue is different. You can have trade disputes in WTO and settle them. It'll take time. So the U.S. has no patience. We know the president in this country has no patience. He tweets every morning very early. But at the same time, we're looking at a situation where, yes, WTO can deal with these things, but there's also the president and the White House saying, look, we're not talking about really opening up the markets only. We're looking at the numbers. We have a $375 billion deficit with you. That's going to go down to $100 billion. If they insist on this, I can tell you within 5 to 10 years, there'll be double-digit interest rates in this country, and there's going to be severe economic slowdown in both countries. So it is kind of getting both parties to the table and understanding what it is that we can achieve. And that's certainly not cutting the trade deficit to that level.
Now, we know that the U.S. does want these very quick results, as you were saying, and we saw that Sarah Sanders out of the White House saying that there will be short-term pain, but for long-term economic gain. What's your take on that?
There's no such thing. First of all, short-term loss will cause them the election, will cause President Trump to lose the House and the Senate, and if he managed to survive this first term in the office, will jeopardize his second-term campaign. The long-term implications is going to be on job growth in this country. We're looking at a period where Federal Reserve is not supplying as much quantitative, not as much, they cut it down actually, so monetary expansion is not there. Fiscal stimulus is going to cause interest rates to increase and inflation to increase at a time when we had 9 years of uninterrupted growth in this country. So once the impact of the tariffs take place, that assumes that they're implemented, we're going to have an immediate impact, short-term economic impact, but with more long-term consequences, especially in the jobs market.
Certainly a lot to unpack there. Thank you so much, as always. Saruhan Hatipoglu there, Beri CEO and CGTN's Global Economics Analyst.